factors. Then we've got, rising interest rates. A warning I wanted to share with our fellow traders is you need to realize that rising interest rates from the Fed Reserve means things like credit card interest rates and margin balance interest rates are also going to go up. So if you are carrying margin balance on your trading account, you might want to start paying that down, selling what you need to sell to get out of that margin balance because that interest rate's going to go up, and you don't want to be in a bad position because of the interest rates on your margin balance. So please consider that. So the other thing we'll talk about, or at least let's think about, and I'll probably post this in the comments so we can talk about it. I'll post it in the Discord. We can have further discussions. Is do we expect Treasuries to find a stable bottom for a month before the Fed announces their quantitative tightening plan? So again, I'm looking at these TMF, TYD, etc. And so let's discuss this in the comments and in the Discord if we think that that's an opportunity to play right now until we get quantitative tightening. And then, what other sectors do you all recommend? We'll talk about that again in the comments, Discord. Here's some that I'll throw out there I think are good to make money. Fighting the high interest rates, the rising interest rates is, high dividend aristocrat stocks. We own Realty Income. There are others, what they call dividend aristocrats like IBM that steadily increase their dividends, have held their dividends for a long time, and you're starting to see, I think, money flow into this area because of that. So the prices are increasing because there's money flow in there. Precious metals, store of value. We've talked about this for a long time to fight inflation, fight interest rates. Is precious metals, gold, silver, platinum, etc. REITs that are not sensitive to rising mortgage rates. You want to, in my opinion, you want to be careful that if there's a negative impact due to rising mortgage rates, that the mortgage rates have already increased, are going to keep increasing with the increasing Fed rates. So some examples of REITs that we like is, again, Realty Income. They're in retail space. Stag we own. They're an industrial REIT. LTC is a healthcare REIT. So again, they're not really sensitive to mortgage rates as much. Others to consider is company with pricing power. If they can pass on their interest rate increases, inflation increases to the consumer, then they're not going to be as negatively impacted like necessities, food, diapers, anything people have to buy, they will absorb increasing cost out of necessity. Another question that I've been talking about is, are the credit cards and buy now, pay later? This is a quandary because they're going to make more money as interest rates increase. They're going to make more money, more profit on the interest payments. But is that going to cause an increase in defaults? Are people going to get totally over their head, underwater, on their debt because of the increasing interest rate payments, and then they're going to default? And is that going to negative? I think short term it may be positive, long term may be negative. So again, that's something we can discuss. So I know there's a ton of information. It's probably a little long, but there's just a lot to consider right now, a lot going on right now. I wanted to give you all this information to as input to from our fellow BeachBum traders, Spacula, and Solidago. We're having this discussion in the Discord. I've got the link to this thread in the Discord. And the discussion was on increasing interest rates, and SPAC asks, is that good or bad? So let's talk about trading and making money in a rising interest rate environment. I think we've been talking about this for almost a year now. We do have some strategies we've talked about in the past on trading and making money in a rising interest rate environment. I'll probably try to snip out those previous strategies and probably try to release those as separate videos because again, we have discussed this for a while. Of what does same way we're talking about the dollar strengthening with interest rates rising, which we've expected. Who does that help and who does that hurt? Well, uh, so the answer to is it good or bad? It's kind of the typical consultant answer is it depends. It depends who you are and what you're asking about. Is it good or bad for the economy or various companies? Or the markets. So uh, we can. I won't talk too much about the overall societal effects, etc. But since we're trading, we're looking to make money trading. We want to know who does it benefit and who does it hurt. Well, rising interest rates traditionally help financial institutions like banks, right? And particularly this inverted yield curve where we see the short term interest rates higher than the long term. That means banks can loan out money at a higher interest rate and essentially pay it back by bonds at a lower interest rate. So it's traditionally good for financials. Now, I'm sure that's all been baked in for a long time because people expected banks to benefit from rising interest rates. Um, it hurts anybody obviously who has debt in a interest rate sensitive um, any kind of interest rate sensitive debt. It hurts home builders because obviously mortgage rates are now up around 6%. So people aren't going to take mortgages, which means people aren't going to buy homes, which means people also can't refinance their homes, so they're not going to sell their homes. So the housing market we've talked about, it rolled over quite some time ago. Home builders say they're in a recession now, so that the whole housing market's pretty much in a recession. So it hurts that segment of the market as well. Um, Now, in terms again, is it good or bad? Um, the Fed being more aggressive, they need to kill inflation. So it's good. It was better for killing inflation. Now, in my humble opinion, a more aggressive quantitative tightening and removing money from the economy would actually help a lot as well. So, is it good or bad for the market? I think the market kind of wants them to get inflation under control at this point. Um, Obviously, again, it hurts the employment market, right? As all these things get more expensive, debt, cost of capital gets more expensive because of rising interest rates. So people aren't going to do capital expenditures; they're not going to hire, etc. So it's going to hurt the housing market. It's we're in a recession already, in my humble opinion, and it will potentially deepen and accelerate our descent into a recession. So again, is it good or bad? It depends. It depends who you are, what you're considering, good or bad. But it will help curtail inflation if they're a little bit more aggressive, and that's why they're expected to be more aggressive. Pretty much, I've expected them to do 75 basis points, and I think the consensus right now is they'll probably do 75 in the next meeting on September 20th. So I hope that at least addresses the question, helps answer the question to some degree right now. And again, I'll pull some of our previous strategies for making money trading in a rising interest rate environment again and try to release those as independent videos. So now, just one final thought in that area is, and we'll talk about some due diligence on stocks again tomorrow as well. But rising interest rates, it makes the cost of capital higher. It also, it makes your dollars more valuable sitting in the bank or sitting in treasury bonds. So you're not going to, it's a risk off move, right? Is I don't have to put my dollars at risk because now I can get an actual return in a safer investment like a bond or savings account, etc. Whereas in the past it was zero. So it removes risk capital. Um, Also, companies can't they can't afford to get loans. So again, they won't be able to get funding. Venture capitalists aren't going to be as willing to fund them because, again, their capital is actually making a real return in other ways. So in terms of growth companies, especially those with really high valuations, really high PE, they're not making money. It's going to hurt them. And I would expect some clean out in the markets. Companies with high debt, we're going to see, clean out the market. Those that can't make a profit, have high debt, a lot of those guys are not going to make it, in my humble opinion. So again, not financial advice, but that's my opinion. So, be careful. And that's why when the yields go up, we had seen that put pressure on technology growth companies that aren't making money, right? The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right hand corner, and we have a whole playlist of videos like this that you can access via the box in the upper right hand corner. Our latest video is available in the box in the lower left hand corner. We hope you like this and have a great day.